Hello everyone, happy Saturday. In today's video, I'm gonna start it off a bit differently, okay? I wanna give you guys a little bit of a rundown of things that I've been working on and a bit more detail about my operation. I don't wanna give too much information, obviously, because business is war. At the end of the day, business is war. So I don't wanna give you guys all of the information, but I wanna give you guys just enough, okay? So number one, right? You guys have never seen me flaunt a Lambo. You guys have never seen me, do anything lavish. You know why? Because I'm a very simple person. I spend a lot of money into things that will help people. So I have AI engineers. I have a lot of different engineers that are working on my team, everything, okay? And I've never asked a single dollar from anyone for anything. I've never received funding. I've never fundraised around nothing. Everything has been completely out of pocket. Just Wave in and of itself, I can fire everybody just to keep it running for the notifications to come on your phone, and the server costs in and of itself is over $10,000 a month. Okay, so obviously it's getting to a point where I feel it makes sense. There's a bunch of people that are completely... So here's the thing. I'm gonna do what is best for my long-term vision. My long-term vision is I'm going to make thousands of hospitals, schools, and orphanages around the world. All right. So for that to happen, this operation and everything that I'm working on needs to be a well-oiled machine and continue flowing comfortably. All right. Which is why I think it's fair for me to begin charging. So what I'm going to do is the following. Let me list this out. And before I continue, Wave, trade signals, all of that stuff is going to remain for free. But here's the thing. So number one, you guys are going to get access to this trading bot. This in and of itself, I can make a business out of this in and of itself. This is the 15-minute chart. You can see how it's doing well. Let's take a look at it on the 5-minute chart. You can see it's doing really, really well. All right. This in and of itself is a business, but I'm going to give this to you. All right. So this is number one. I'm going to give this trading indicator, buy and sell indicators, you guys, to go long and short. Number two, the live streams, it's only going to be people who pay. Number three, I'm going to be giving multiple 2 to 3 times a week. We're going to have members only videos where we go over the market 3 times a week, 2 to 3 times a week after hours together. All right. We're also going to have, I'm also going to make it so members only can receive the specific trade idea videos where I go in depth about the trades. This is actually number 5. So the first 100 people that sign up will receive 3 meetings a month of one-on-one coaching. If you guys don't want to support, I completely understand. You guys can continue to enjoy Wave, all of the free trade signals. I'm going to have the free crypto trading bot. We're going to launch that in December. You guys can enjoy all of that. I'm going to be launching that for free as well. You don't have to worry about that. That in and of itself, that did 10% in the past week. That did 10% returns in the past week. I've paid my engineers to make that app from scratch. I've never asked a dollar for anyone to help fund that at all. I'm not going to charge for that at all. So you guys can enjoy that. I'm going to launch that in December. By all means, you don't have to support. But for the people that support, if I've helped you at all in the past 2-3 years, if I've taught you anything, if I've made you money, if you guys support. So first of all, all of these things, super, like, this is ridiculous that I'm even charging $50 for this. This can go hundreds of dollars, regardless. If you support, and if I have helped you at all during these past few years, and if you support, I've never charged anyone for anything. I work tirelessly already. it scares me to think about how much I'm going to go above and beyond for you people that do support. And what I will say is that every single person that supports, every single person that buys that membership, I'm going to do everything in my power to make sure you guys become as rich and successful as you possibly can. I'm going to go above and beyond in every single aspect of anything that you guys need help with. It's frightening me. It's frightening me to think about what I'm going to do to help you guys. This is no joke. I take this very, very seriously. Me doing this for free, you guys know that I take this very, very seriously. Once I start charging for this, I'm going to go above and beyond for everybody. If you guys have any sort of issue with anything, I'm going to be there. You guys have a leak in your house, I'm going to find a plumber for anything of that sort. I'm going to go above and beyond for you guys. So this, I think it's very, very fair what I'm doing. I've launched Wave. I put my money where my mouth is. I've never charged $1 for anything. I've launched all of my products before asking for anything. Do you understand? So this will definitely help keep the ball rolling. Whether you guys support or not, the ball is going to continue rolling. But what I will say is that my focus is definitely going to be on the people that are the most loyal and definitely want me to succeed as well. So if you guys want me to succeed, and if you guys want to succeed yourself, and you guys want to invest in yourself with this, by all means, this is gonna be really, really crazy. And I am very, very excited to do this. So I'm gonna explain how you guys can go ahead and do that. So very simply, you guys click on my channel, go to my channel, and click join. $50 a month for all of that. That's crazy. Honestly, should be way more, but it's $50 a month because I just feel icky to ask for money. So I would rather take less money than whatever is necessary. But $50 a month for all that stuff. And so yeah, let's just keep it at that. You guys are gonna subscribe. Once you subscribe, you guys are gonna go into the membership only section. Oh, you're also going to get access to the Discord, the closed Discord group. So once you guys go ahead and do that, you're gonna fill out a form. I'm going to give you access to the TradingView bot, depending on your username, obviously, and various other things in that form. Once you guys fill that out, your email, everything like that, everything's going to be sent to you. So yeah, I'm excited to see what the future holds. And I am very, very, thankfully, I'm very fortunate that I'm able to do all of this stuff. I've been able to get to where I am without having to, charge anyone. But now I think with all of these things, I'm giving way more value than I'm actually asking for. So in return for what I'm asking for. So I think this is fair. So yeah, everyone that's supporting is going to get the best version of me. If you guys don't even tune into the live streams and you guys want to support, by all means, go ahead and do that. Every single person that does that, you guys are going to, for the rest of your lives, I'm going to be there and I'm going to make sure that I can help as much as I possibly can. You're going to have an ally in me for the rest of your lives. No ifs, ands, or buts. I will be there to the best of my ability. Because this is very serious to me. I've never charged anyone for any of this stuff. This goes completely against everything that I've been saying. But it is what it is. All of this stuff I feel is way more valuable than $50. So yeah, I think it's fair. But everyone that does support, everyone that does get involved in this, I'm going to make sure that you guys get way more value than what anyone else would ever be able to give you. And I already have been giving you that completely for free. So I can't even imagine what is in store once you guys do start paying. All right, so let's continue on. So number one, let's go ahead and take a look at the news for this week. So Tuesday, we have CPI data coming out pre-market. That's obviously going to cause a lot of issues with the market. That's going to inflate IV. And Monday, swinging anything into CPI data is going to be very, very risky. So keep that in mind. Number two, we have a lot of news coming out Wednesday morning as well. So swinging anything into Wednesday is also going to be tumultuous. It's going to be very, very choppy as well. Then Thursday, same sort of news in the mornings, nothing too out of the ordinary. But I'm expecting another dip towards the end of next week. I'm going to give more insight on that as the week goes on, but I'm expecting a bit of a dip into the end of the week, similar to last week. Next, let's go ahead and take a look at the dollar. All right, so the dollar is important because it generally has an inverse relationship to the market. When the dollar is going up, that's bad for the market. All right, so we can see that the dollar failed perfectly at the 50% fib. If you are a bear, you want to go short at the 50 or the 618% fib. If we get a close above the 618% fib, the chance that we continue going up ends up being about 70%. It ends up being over 70%. So this is a very, very major key level on the dollar, and it just so happens to coincide pretty perfectly with this large red candle. So we have to see how the dollar responds at this level. If it can't break above it and it makes lows, then that's going to be very, very bullish for the overall market because it has an inverse relationship, right? So far, it's doing exactly what it needs to do for it to continue falling lower. But essentially what you really want to see is a big, strong move to the downside on the dollar to really like this is not a good enough bearish signal. Okay, what you would rather see is on Monday you really need to see some weakness, and then we could get a much more dignified move to the downside on the dollar. But for now, it's not really showing that. All right, so next, let's go ahead and take a look at the VIX. All right, so the VIX is also important to look at because it has an inverse relationship to the market. If the VIX is falling, then that's very, very good for the overall market. And as you can see, the VIX has come back down to retest this lower trend line here almost. All right, and the lower level of the Bollinger Band is pointed lower. There's a lot more room to fall on the VIX to the downside, and especially with CPI data heading in, this can really start capitulating lower. Since we just made a new low, if we end up making another low below Thursday's low, this can easily just continue falling lower and retest these prior important levels of support down here at 1350. And first off, at $14, right? But then 1350 is that next really, really important level of support on the VIX. But overall, this is looking pretty weak on the VIX. We're most likely going to have either a choppy or a bullish day heading into Monday. So that would mean that the VIX is going to fall. Next, I want to take a look at the yields. All right, so we were looking at how the yields, basically the yields are important because they also have an inverse relationship to the market. If the yields are falling, then that's generally really good for the overall market. But as you can see, over the past 2 days, we had a big bullish reversal. And then today there was also another move to the upside on the yields. So it was not a completely perfect correlation. This had a lot to do with the bond market and what was going on with the bond market. So it was not a completely correlated move, but generally speaking, the market is inversely correlated to the bond yields. Okay, so the 38.2% fib at this 4.682% level can still be touched. So if we end up touching this level and retesting this, or the 50% fib, then that is bearish for the overall market. And this is still very, very possible that we're going to touch these levels. All right, so just be cognizant of that. Let's go ahead. This is the 10-year yield. Let's go ahead and take a look at the 20-year. So the 20-year bounced It's at a level of resistance. We need to break above that, similar to what the 10-year was. And then let's just go ahead and take a look at the 30-year as well. The 30-year is showing the most weakness compared. So this essentially also really needs to break above these highs here, and if that happens, then that's going to be very, very bearish for the market, in my opinion. So overall though, the fact that we opened outside of the lower level of the Bollinger Band and we're still holding the 50% of this move, if you look at this candle and you draw a Fibonacci level for this large candle here, we held the 50% fib of this move. This can easily continue to go higher. Okay, so just be cognizant of this on the 30-year yield. And in response, we could also take a look at the TLT. So the TLT is still also holding its bullish structure a bit. This can still continue to go up. So the TLT is bullish for the overall market. It has a more correlated relationship to the market. So if the TLT is going up, overall market can also go up. But by all means, this is not a bullish setup in the immediate term. We should be falling lower. Unless, a lot of buyers just step in, we should be falling lower. But, let's see how that turns out. Let's also take a look at the 30-year bonds. This is also a really, really ugly bearish setup. If you guys watch my live streams, you guys know this is a really, really ugly bearish setup. And what you want is this to bounce a bit higher to get higher, cheaper shorting opportunities. Because the momentum, something like this, is very, very bearish. And you can't expect this to continue rising. Okay, so this is not good for the market because the bonds generally have a correlated relationship to the market. So if this ends up breaking these lows, that's going to be pretty bearish for the market, in my opinion. All right. Next, let's go ahead and take a look at the large tech stocks. All right, starting with Apple. Apple closed and broke outside of the upper level of the Bollinger Band. We gapped up, we broke above 184. And we really closed very strongly. We're at a major level of resistance, but this is really strong. As you can see, this high here was a prior low from back in July of 2023. So this low here at 186.60, we hit a high of 186.57. So you can see prior levels of support and resistance still hold, and we're at a major level of resistance, okay, on Apple. And if you guys remember, so let's just go ahead and take a look at the rest of them, and I'm gonna give you guys some more thoughts. So that's Apple. Nvidia also had a screaming move to the upside, also at prior levels of support or resistance at 485. AMD also had a really big move to the upside. Microsoft had a huge move to the upside. Google is continuing doing its thing. It's trekking along, doing its thing. Amazon had a nice reversal. Tesla, not so much. A lot of the money was going into the other names, but still had a pretty decent day, relative, right? Let's take a look at Meta. Had a huge day. Finally crossed above this major level of resistance at 326 again, right? The last time this happened, we only held above it for 2 days back in October, and we were very overextended to the upside. But now we are within the Bollinger Band, and the Bollinger Band, the upper level of the Bollinger Band is pointed upwards. So there is a lot more room to go to the upside on Meta, which is really bullish. So Meta is probably the most bullish setup out of all of the tech stocks right now, in my opinion. And as long as it holds this level here, 326, this can continue going up, and then there's the target at 337. Okay. To be fair, let's take a look at Netflix. All right, Netflix also really strong move. Piece of crap. So overall, the tech stocks doing really well. But here's the thing. So if you guys remember, for example, on Tesla, all right, when we have a huge green candle on Tesla, what have I always said? especially after we are consolidating, we make highs, and then we have a monstrous green candle. What do I say? That's not the time to go long. When we have a monstrous red candle, what do I say? I say that's not the time to go short, right? So now that begs the question, when you're looking at Apple and when you're looking at all of these large tech stocks that are ripping to the upside, that is not the time, unfortunately, to start going long, because that is a really things are already too strong to the upside. Okay, so going long here, guys, unfortunately, is the equivalent of going short when the Bollinger Band, when we're trading outside the lower level of the Bollinger Bands. Okay, so going long when things are outside the upper level, it's the same thing. You can't be going long when we're like this. Okay, the most bullish setup though is Meta, but when a lot of these stocks are starting to get overextended, Nvidia, AMD, Apple, Microsoft, it becomes really tough to start leaning long. Okay, so thankfully we're still holding on to our 421 calls on the SPY for December. Thankfully, and it does look like, so here's the interesting thing when you're looking at the NASDAQ. Okay, so we are 2.5% away from all-time highs on the NASDAQ, and bullish seasonality, guys. November, December, really bullish seasonality, and you can see this trend line just absolutely held, and pretty crazy move. And the upper level of the Bollinger Band on the NASDAQ is pointed upwards. Things are still, there's still potential to go higher, but what's interesting is that we are still right at this level of resistance at 378.27, and still below this level of resistance at 380.71. So here's the thing, we could continue skyrocketing up, but the higher we go without a strong enough move to the downside, the more difficult it is to lean long. Okay, so what I first want to do is I want to take a fib level from the lows right here on the spot. First of all, let me just go ahead and just look at it from where we drew it yesterday, right? We did not get a retest of the 23.6% fib. When this does not occur, when we don't get a retest of the 22.6% fib, regardless of where we have the top and the low and everything, we did not get a test of it. So the fact that we didn't get a test, that is showing that's showing a lot of strength to the upside. So that can't be ignored. But the issue with that is after we make a high and break above these major levels of resistance here, which is what we did. We broke above 438. We broke above this 437.85 level. We also broke back above the gap, right? The gap edge. Comfortably broke above it, and we're comfortably trading above 440. But this is the most worrisome thing, because if you guys were watching my video from before, when we don't touch the 22.6% fib, there is oftentimes a high chance that, yeah, we could continue going up in the short term, but this move does not always last until we get a strong move to the downside first. So that's my only issue with this. I'm gonna do more research on when we do have 7+ green days in a row and we don't touch the 22.6% fib. I'm gonna do more research on exactly this to see to see what the market ends up doing. But this structure, yes, we could continue up, but things get really difficult once we hit this 442, once we hit the 444 levels on the SPY. Okay, so definitely things are starting to get a bit overextended. This whole move to the upside, if people went long here, absolute ridiculous to be going long here, in my opinion. Always look to go long at levels of support, and always look to go short at levels of resistance. And if you think that the momentum could continue going up, wait for a pullback first and then go long. Never try to go long at a level of resistance hoping that the momentum is going to push above it. That's how you get chopped around. That's how you end up losing. This is the same concept, and I know a lot of people are going to be upset about this, but this is the same concept as trying to go short at a level of support, hoping that we're going to fall lower. Okay, so just be very, very careful about this. I don't want people needlessly losing money. And the SPY and the NASDAQ both look decently bullish, but there needs to be a bit of a pullback, and we're getting very close to major levels of resistance. 442, 443. That is, I haven't even touched the 421 calls that we got. Haven't even touched them. But most likely when we hit 430, 443, 444, I'm going to take some profits on them. All right, so there's that for the SPY, the NASDAQ. That's a major level of resistance. Let's go ahead and take a look at the IWM. So the IWM looks very similar to Tesla. Okay, so this still does not really look that strong, but we are technically holding this level of support. We could continue going up higher, and of course we know that the IWM is going to lag behind, right? But as long as the IWM is holding support, if the NASDAQ shows a lot of strength but the IWM is still holding support, that is still overall very bullish and green for the SPY. So that's what the IWM is doing right now. It's holding its own while the NASDAQ leads, and that is generally what has always been happening for the market recently. So the IWM held this 167 level, and it is knocking on the 170. It's about to come to that 170 level, so we have to see how it responds at that level. By no means this ends up being, so the IWM is actually also a pretty solid risk reward to go long, in my opinion. So there's two things that really look the best for upside potential. It's the IWM to me, right? It's the IWM and Meta, personally. So based off of the candle structure and also getting involved in tech with Meta, and going long on the IWM, this has the biggest upside potential. The SPY is getting really close to a level of resistance. The IWM is still about 2% away from resistance, whereas the SPY, it is only 0.5%, or if you want to say 444.82%. Okay, but the IWM has the biggest upside potential. Obviously, it's been the laggard, right? But I really think the IWM and the NASDAQ, the IWM and Meta have the biggest upside potential. All right, so there's my thoughts, and yeah, I'm gonna keep that at that. I hope you guys enjoyed today's video. Please make sure to like, comment, subscribe, do all that good stuff, and I will see you guys bright and early on Monday morning. Thank you.